Mayuresh Joshi is also joining in now on the show. And Mayuresh, on the face of it, it seems like an absolute miss come through. And Darshan was pointing out how there are a couple of one-offs as well. There's higher other income, and the tax that has been paid out this quarter round has also been lower than historically. And despite, these additions and subtractions, the profit number is a clear miss.
Oh, yes, Megha, clear miss in terms of how the numbers have panned out. So they've been disappointing in terms of how the top line, EBIT, and the bottom line have come through. Clearly, I think if you look at the operational performance, the EBITDA margins were expected to be between that 19-20% mark, and they've come way lower than what the street was anticipating. So there's an operational miss there. The one-offs, Darshan, that was talking about higher other income and probably lower taxes, even that has not aided the bottom line. It has come much lower than what the analysts were expecting. So I think the traction that one was expecting from exports and the Indian formulation business, that looks to be a miss, clearly, from the top line that has come through at this juncture.
It was also expected that while we're talking about, the overseas business, South Africa particularly was expected to show, a weak performance because of currency issues as well here. Do you think that's had a part to play, Mayuresh?
Yes, I think that was expected to come through. And again, the expectations from management commentary would now be how the metro operations are moving on. But clearly, if you dwell deeper, my take is that the commentary even on the domestic business is to be keenly watched out for, because domestic business was holding up pretty well and they were increasing penetration in the domestic market. So clearly, I think numbers disappointing on all counts. Management commentary is going to be key when it comes to the kind of launches they're expecting, what happens with metro operations, and again, domestic formulations, as I've been mentioning.
Meeta, Mayuresh is flagging off what he's going to be watching out for once the management does speak to us. What exactly is it that you'd hope to hear from them? And I know it's too early to tell because, as Darshan was pointing out, the press release is not yet out. We don't have finer details of the numbers. But what, in your opinion, could have led to this sort of performance?
So I clearly think that one is the South Africa and also the US, which would have led to this. Domestic, although they were, gaining some grounds, as the earlier analyst also pointed out. So, and that has been good for across companies. All the peer companies, if you see, they've reported good domestic growth. So, I believe Cipla should probably also have done something better on that front. But exports clearly would have been the reason. That's what I can guess as of right now. As far as things to watch out would be, I think, on the guidance front, because if we remember at the first half performance, Cipla had posted 33 to 34% growth, but they were still guiding for a very flattish 22 kind of a percent growth for the second half, for the year to put together. So we were only looking at a very slim growth in the second half. So now we would see whether they are revising the guidance little upwards, keeping in mind few launches which might come up, and also the UK launch of the combination inhalers and the market share gains in Pulmicort. I think these are the key things to watch out.
And as we're talking, the Nifty earnings certainly seem to have picked up pace because we've just had ACC numbers also that have just come out. I just want to quickly visit that because ACC also, it seems like, has put up quite a disappointment for the fourth quarter. 100 crore rupees, roughly 102 crores rather, is the profit number that's come in versus expectations of almost 128 crore rupees. So there's a miss definitely coming in from an ACC as well. Let's wait for more details and, the other numbers as well for this cement major. Keep in mind that we were expecting that revenues would come in around the 2,800 crore rupee mark for ACC. Let's wait for, what are the finer details here. We'll be watching out for the dispatches, which are expected to remain relatively flat. The demand situation on the ground hasn't really picked up either, with the infrastructure pickup, CapEx pickup also remaining largely lackluster. So that's ACC. That's the other big number that the markets would be reacting to come tomorrow morning. But Mayuresh, of course, is right here with us. And Mayuresh, what's your current stance with Cipla? In today's session, we had close to 4% knockdown coming on the stock. How much pressure would you be building in for tomorrow morning? Do you think we could, we'd probably see a sharp gap down start? And what would be your near term as well as the fundamental call on Cipla?
Again, I think management commentary is going to be very crucial here. And as I mentioned earlier, if the management guides to a weak operational performance that has ensued in this quarter related to U.S. operations, the stock is definitely going to take a beating. So clearly, I think the stock has already corrected significantly, but the performance as far as we've seen it right now looks very, very soft and weak. So clearly, I think management commentary on the inhaler business, the Medpro operations, the domestic formulation expectations would be keenly watched out for. But my own expectation is that the stock will open 3 to 4% lower, to say the least, at least in tomorrow's trade.
While we wait, for the management commentary, Mayuresh, just as a ballpark estimate, do you think that you would be revising your long-term rating on the stock also?
We carried a neutral rating because of the underperformance that Cipla has given out in the past few quarters. So once we hear out the management, in fact, we might revise the numbers downwards if the trend probably is indicating to the fact of a slowdown happening in the U.S. business. But again, I think that would not be the case in my opinion, because the product launches that Cipla is talking about, if they start coming through the next few quarters, you should see certain amount of earning stability, at least from an FY17 perspective. So clearly, I think downgrades a little bit premature at this point of time. Let us hear the management commentary out, and then we'll probably take a call on the stock. At the current juncture, we are neutral onto the stock.
I mean, the overall market conditions remain so dicey. Today alone, we've had markets, trading at fresh 21-month lows. There seems to be just no respite whether it comes to mid caps. We've had, a good quarterly performance from companies few and far between. Mayuresh, take a look at how banks have performed. Like, it's been an utter disappointment, I would just like to put it that way, across sectors, across industries. There seems to be no respite at all. In fact, the latest number, like I mentioned, we've also had ACC that's just come out. Mayuresh, I'm not really sure if you'd be able to comment on ACC numbers as well, but the situation on ground had been quite dodgy for cement companies also, and that seems to be getting reflected in ACC numbers as well. We've had a miss come in on the bottom line. The profits are just over 100 crore rupees. If you could give just a quick comment here as well.
ACC, again, I think if you look at the bottom line, a little bit below what the estimates on the streets were. If you look at the EBITDA per ton, again, expected to be between the range of around 400 to 410 odd rupees. You're clearly looking at the expectations on the street of expectations of cement recovery and demand recovery taking place. And that has probably not happened in the past 2 quarters. Having said that, if you look at the input costs, they have moderated to a certain bit. But again, realizations have not shown signs of improvement. And once the demand recovery starts happening over the next few quarters, and once you see a sustained recovery happening in terms of volume growth for cement companies, you will see realization stabilizing and then moving up in the northwards direction. But till that point of time, we still continue our stance that headwinds will continue. The operational performance in terms of subdued realizations will continue for the next quarter, to say the least. And having said that, I think the valuations again become very, very important here, because you clearly need to distinguish between the larger players, the smaller players, the north-based players, the players who are operating out of the east of the country, the south-based players who obviously are trading at much lower valuations considering their capacity. So capacity additions, the size of capex that they're probably doing, the realizations expectations, the volume recovery, I think these are important aspects. But again, on ACC particularly, I think the numbers on the bottom line probably have missed estimates. You're probably looking at dispatches being between that 5.8. I don't have the press release, but again, between 5.8 to 5.9 MT. But again, realizations are expected to remain soft, at least for this quarter and next, for a whole host of cement companies.
We don't have the press release with us either, unfortunately, Mayuresh. But just hold on to that thought. We've also got Mangesh Badang with us of Nirmal Bang. Mangesh, just quickly run you through the numbers and for the benefit of our viewers as well. Profits for ACC are just over 100 crores. We've had sales come in at 2,846 crore rupees. And the margins as well seem to have actually shown a remarkable improvement, 9.8% versus 6.6%. Are you happy with these numbers, barring the bottom line? Do you think operationally, at least, the company has managed to do okay?
The company has done well on volume front. Whereas if you look at the EBITDA, I think it has been slightly disappointing. It's probably just lower compared to the consensus estimate, which were at around 290 crores, but we were expecting a relatively higher number. So generally what we have seen with ACC is that in the fourth quarter they do book a lot of other expenses, which they don't do it over the other quarters. Plus there are tax related issues. However, speaking operationally, as I said, they have shown 6 million tons of sales in cement, translating to 4% growth. And probably we would see a similar number going forward also, because this year the numbers are relatively bad because of partial or so for some time the mines at Chaibasa were closed. Overall, on cost front, we have not seen, the kind of improvement that we have seen for other companies, which is again a mess. So power and fuel costs have gone down, but the other costs have increased. Like freight and all. So would still, in terms of EBITDA per ton also, I don't see much improvement in that, because that has come, lower than 600 rupees. So not too many positives, but not too many negatives also.
Right. We've also got right now another expert joining in on the show. Varun Goyal is here from Motilal Oswal. Varun, we've had the revenue as well as the operating performance for an ACC that seems to be in line with what the street was building in.